So we were talking about supply and demand levels yesterday, all right? And we say that we have two types of supply and demand. We have two types of zones, okay, when it comes to supply and demand, which we say that we have continuation zones and we have reversal zones. So what is a continuation zone? Like we said, a continuation zone is a zone that triggers price to continue to the intended direction, to the opposite, to the direction where price has been trending before. All right. But the reversal zone is a zone that triggers price to start trending to the opposite direction. Are you guys following? Are you all following? So now, when we talk about continuation zone, we have rally based rally and drop based drop. So rally based rally is simply referring to an uptrend. Okay, simply referring to an uptrend. Because in an uptrend, when we talk about rally, it means an expansion to the upside, and then the base is kind of consolidation. That's a sideways market, right? Then another rally, that's an expansion of continuation, an expansion that shows continuation to the upside. Are you guys following? Now, but when we talk about drop based drop, we are talking about the downtrend. Okay, that's the opposite of the rally based rally, which is an expansion to the downside, all right, a consolidation or sideways market, and an expansion to the downside. Again, that's continuation. Okay, but in reversal zone is the opposite. Now, reversal zone, we have rally based drop and drop based rally. Now, what does that mean? An expansion to the upside, a consolidation, and then a drop. All right, and then a drop. So an expansion of a bullish market, all right, then a consolidation or sideways movement, that's the base, and then a drop. So with the explanation, this is what it looks like on the diagram. So this one is the reversal zone. Okay, so when we talk about reversal zone, we say it's a rally based drop. All right, so that rally is an expansion to the upside, then the base, a sideways market, and then the drop. Okay, then in a in a downtrend, we have drop based rally. That's an expansion to the downside, a consolidation, and an expansion to the upside. Are you guys following? So that's it. All right. Now, how can we collectively locate and draw supply and demand zones and also understand discount and premium levels? That's a question. All right. So now we can indicate supply and demand zones. Supply and demand zones are most often being mapped out to where price has a consolidation, right? Being mapped out on a consolidation areas. Okay. So now once we have identified our base, which is the consolidation, all right, you may ask what do we specifically mark out in the base? All right. So do we mark out the entire base? Do we mark out the entire consolidation area? That's the question. All right. But the answer is no, we don't. I often like to draw my zones off an indecision candle. Are you guys following? So now, an indecision candle is a candle where both buyers and sellers come into power, leaving a candle with mainly wicks and a small body. All right. So usually the body will be in the center of these candles. It looks something like this. So this is a diagram on the chart. All right. This is a doji candle. It's most often called a doji candle. Okay. Now, but to mark out our supply and demand zones, does that mean that anywhere we see indecision candle, we should call it a supply zone? No, that's what brings us to equilibrium, discount, and premium levels. So, what is an equilibrium? An equilibrium is the center of any movement, right? The center, the middle, is what we call an equilibrium. Okay, so the discount and premium levels The discount level is where we want to buy from, all right? So after the equilibrium, you get discount and you get premium. So the premium levels are where we are looking to sell from, okay? While the discount levels are where we are looking to buy from. Are you guys following? So to identify discounted and premium levels, you must know how to identify the equilibrium. All right. So most of the times we use Fibonacci tool to map out this equilibrium and identify our discount and premium levels. Okay. So now equilibrium is a midpoint of a price range or the midpoint of a swing. Are you guys following? It is the level or of neither cheap or expensive. Therefore, this wouldn't be a level we want to execute a trade. So now an equilibrium is a level that is not a cheap level, is not a level that indicates cheap, and is not a level that indicates expensive. All right. So we don't want to place our trade at this and on an equilibrium level. Are you guys following? So therefore, this wouldn't be a level we want to execute a trade. All right. So we want to be buying in a cheaper rate. Are you guys following? So we want to buy on a demand and we want to sell on a premium level. That's in an expensive level. Are you guys following? So this is the diagram of premium and discount level. These levels are the levels that we are interested in. All right. We're interested on the 62% Fibonacci level. We are interested in the 70.5% and we are interested in the 70% Fibonacci level. Are you following? Now, these levels are the levels where we identify the premium and discount levels, okay, after the equilibrium. All right. So for long entries, your Fibonacci has to be drawn from the swing low to the swing high. Are you guys following? So this still refers us back to market structure. All right. Now, and the opposite way around when it's looking for short entries. All right. So if you're looking for a short entry, your Fibonacci should be drawn. If you are looking for a buy entry, your Fibonacci should be drawn from the swing low to the swing high. Okay, from the swing low to the swing high. But if you are looking for a sell, it should be drawn from the swing high, that's the previous swing high, to the immediate swing low. Are you following? So this is how to draw a Fibonacci. These are a diagram on how to draw a Fibonacci. So I just want to cover this so that when I go to the chart, it will be very easy for you to identify. All right. So on my left is the bearish Fibonacci levels. All right. You can see the way I drew it from the swing high, the previous swing high to the swing low. So I will now sell from a supply after identifying the equilibrium. I'm selling from the premium level. All right. And on my right is a bullish Fibonacci level. Okay. It's a bullish Fibonacci level. You can see how I drew it from the swing low to the swing high to the immediate swing high. All right. And then I identify the equilibrium. The equilibrium is the 50% Fibonacci level. Are you guys following? So I identify the equilibrium and then I buy from anything below that 50% Fibonacci level. So let's go to the chart and see chart example and some identify some premium and discount levels and some supply and demand zones where we can potentially buy from or sell from. Okay. Now looking at this chart, you will see that, okay, looking at this chart right now, all right, this is our swing point. This is our swing point A here, okay, because price is trending down, and this is our swing point B here. All right. So where is our premium and where is our discount? So in this case, we are looking for a sell entry. Are you following? In this case, we are looking for a sell entry. So where will we be looking to sell from? We take our Fibonacci tool, We draw it from this previous swing high to the immediate swing low. Are you following? So here is the equilibrium. All right. After identifying the equilibrium, where are we now looking to sell from? We will start looking to sell from this level here. All right. This level here. Though this level has been mitigated before, but this is the level we will be looking to sell from. Are you following? So what that means is we'll be anticipating if price should come back to this level, all right, to the 50% retracement level, that's the equilibrium. We are not interested. Then when price bypass, all right, get anything above here, anything on this premium level is where we want to sell from. Okay. So if price come inside this level, we'll be looking to sell and target this swing low. Are you following? Target this swing low. So now, again, all right, see another example. We have our swing point here, our swing point A here, all right, and we have our swing point B here. Are you guys following? So now, after marking out the swing point A and swing point B, we take our Fibonacci tool, mark it from our swing point A here, all right, because price is bearish, to our swing point B here. And where we will be looking out to buy from, to sell from, I mean to say, sorry. Now we have first, this is a supply level, okay, an unmitigated supply level, all right, and this our 62 70% level, okay. And when price return there, you see what price did? Price sold from that level, price sold from that level and hit our take profit at the swing low. Are you following? Are you following? Now let's look for another example. All right, let's look for a bearish example this time around. A bullish example, I mean to say, sorry. All right, so here, after the break of structure at this level, after we have gotten a break of structure at this level, all right, we now have our swing point A here, okay, and our swing point B here. Are you following? Now, after identifying our swing point A and our swing point B, what do? We use our Fibonacci tool to mark from our swing point A to our swing point B, all right. After identifying that, now which level should we be looking out to buy from? We should be looking out to buy from this particular level here, all right. So in this case, it might be called a missed entry, but you see the way price violated the equilibrium level, okay, and then came inside the discount level to start buying from. Are you guys following? Are you following? As you can see, price later came back to that level to react from it, but the momentum couldn't reach the upper side. Are you guys following? So now, this is it about Fibonacci. All right, this is it about Fibonacci, about discount and premium level. If you don't understand, let me see you on the chart. If you don't understand, let me see you on the chart. If you understand WFS on the chart, let's move on. So let's get back to it. Let's look for another example. Let's look for another example. After getting a break of structure at this level, where is now our swing point? This is our swing point A here, all right, and this is our swing point B here. Wait, sorry guys, this is the actual break of structure, not this one. So this is where we get a break of structure, all right. This is where we get a break of structure. So this is our swing point A, here, and this is our swing point B here. Now, if we take our Fibonacci tool to mark from our swing point A, because it's in a bullish scenario, to our swing point B, you see the way price violated the 50% Fibonacci level, the equilibrium. You see the way price violated the equilibrium, all right, seeking out liquidity at the equilibrium level and then start buying from there. Are you guys following? Are you following? So if you watch closely here, you see that price seek liquidity at the equilibrium before it take off. All right. So that's it about supply and demand, or support and resistance, supply and demand and Fibonacci. Hope you understood. Okay. Now let's forecast a future trade. All right. Let's forecast a future trade. So this is 4-hour time frame. Let's start from daily. Let's make a live analysis. All right. Let's start from daily. Okay. So where is price on a daily time frame? On a daily time frame, price is on a demand level. Price is on a demand level. All right. Price is on a demand level. Now, why did I say our price is on a demand level? This is bearish. So we have our break of structure at this level. Okay. Since we have our break of structure at this level, we take our Fibonacci tool from our swing point A, which is this level here, to our swing point B, which is this level here. Are you following? Now you have seen that price has violated the 50% Fibonacci level, all right, coming into our 62% and 70% level, which is and again, you can identify an indecision candle at this level that price mitigates just now. All right. So this level is where we should be looking out to buy from. This is our point of interest now. Are you guys following? So this is our point of interest now. All right. So being it said that this is our point of interest, what do we do? Do we just enter the trade? No. Now we move down to our 4-hour time frame. Now we remove this Fibonacci. We move down to our 4-hour time frame to make sure that it corresponds with what the daily time frame is telling us. So what is daily time frame telling us? Daily time frame is telling us to start looking for a buy. All right. Now let's go down to our 4 hours time frame. Are you following? Now on our 4 hours time frame, you can see that price is still trending down. All right. Price is still very much bearish. Okay, so let me put line chart so that I will be able to draw out trend line effectively. All right, so this is the 4-hour time frame trend line. Are you guys following? So this is 4-hour time frame trend line, right? Now, price is still very much bearish on the 4-hour time frame. All right, but on the daily time frame, price has already come inside our demand level. Does that mean that we will just buy automatically? No, we still wait for confirmation. Now that 4-hour is still bearish, what do? We know that okay, this 4-hour time frame trend line, and when price comes to this trend line, we trend line traders will be looking to short from here, but us already knowing that price mitigates a demand level, all right, we should be looking for every opportunity to buy. But we have this in mind that this is what people should be looking out for. Okay. We will now go down to our 15 minutes time frame to see what price is doing there, or our 5 minutes time frame to see if the trend is already changing on the lower time frame. All right. Now down to our 5 minutes time frame, what do we have? Okay. What do you have? After price mitigates this daily demand, we have a shift in market structure here showing a trend change. Are you guys following? Showing a trend change, but this trend change does not have, there is no momentum. Are you guys following? There is no momentum here. So, and if there is no momentum, you can clearly see a trend line forming. All right. Let me use the line chart so that the trend line will be accurate. Are you following? You can clearly see a trend line forming. So this trend line is signaling a bullish potential, but there is no momentum yet, despite the fact that we are coming from a demand level. All right, so we don't automatically start buying because 4-hour is still very much bearish. So what do? what do? Is either we wait, okay, we wait, we go to our 4 hour time frame to mark out the 4 hour zone. All right. So when we mark out the 4 hour zone, we wait for price to come into that 4 hour zone, and then when price variates the 4 hour trend, that's when we will start looking for buys. Because right now we are still very much bearish, and 5 minutes is our switch bullish, but there is no momentum. All right, there is no momentum. So back to 4 hours. Back to 4 hours. Okay. So if this is what everybody is seeing on the 4 hour time frame, now where will we be looking to short, or where will we be looking to monitor our 4 hours to know if we can short from there? All right. So this is our swing point A, okay, to our swing point B here. Are you guys following? So where are we looking to sell from? We are looking to sell from one, this level, everything inside this level, all right, is where we are looking at. Is where is our point of interest, okay? Everything this level is our point of interest for the fact that it's not the equilibrium. All right. So you can see that this particular trend line now lies on the equilibrium level. Okay, so if price should actually seek liquidity from this equilibrium level, then we are getting a trend line break. All right. So when you get a trend line break, what should we start anticipating? After a trend line break, here, we will start anticipating a retest and then a buy off to target all this trend line liquidity here. Are you guys following? Is anyone confused? All right. So like I always say, when it comes to market structure, all right, we have on a bullish scenario, on a bearish scenario, we have lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. So this indicates a bullish trend. Anytime we have a new break, that indicates a trend continuation. All right. Anytime we have a break of structure, that indicates a trend continuation. So now, all these trend continuations here, all right, and when price is trending down, if you observe all these lows, you will notice that and if you draw a line between those lows, that they touches each other. All right, they will be touching each other. So that's what we call a trend line. Okay, so that line is to indicate the trend. Now, anytime this trend line gets broken, anytime price violate this trend line, I covered this yesterday, that means a new trend is about to begin. All right, a potential new trend is about to begin. So what do? Mostly trend line traders wait for a retest on that trend line. All right, they wait for a retest to buy. Are you following? They wait for a retest to buy. So now, but in this case, when I say that we have external structure and internal structure. Now, this case here, okay, in this case, this is my external structure. Are you following? So this external structure can be 4 hours. This is my external structure. So let's say this external structure is 4 hour time frame. All right, is 4 hour time frame. Okay. Now, which time frame will be the internal structure? The internal structure can be 15 minutes time frame, it can be 5 minutes time frame. Are you getting me? So now the internal structure, which is 5 minutes time frame or 15 minutes, now let's just use 5 minutes or let's use 15 minutes, right? And 15 time frame. We look something like this. If you can clearly see that our swing point A is here, all right? And our swing point B is here. So when price is inside this box, from our swing point A to our swing point B, we are still very much bullish. Are you following? So when price is inside our swing point A to our swing point B, we are still very much bullish. Okay, but meaning that we are still bullish, if you go down to a lower time frame like the 15 minutes time frame, you start seeing a bearish trend. Now this bearish trend will look something like this. All right, let me change this color. Now let's say that this swing point, this external structure, you can see the external structure range, right? This external structure is our 4 hours. Are you guys following? Now the internal structure is our 15 minutes. What will the internal structure look like? The internal structure right now will look something like this. Okay, you start seeing a bearish trend on the 15 minutes time frame. So this bearish trend is actually the 4 hours structure pullback, actually the 4 hours internal structure pullback, until price gets to a discount level, a demand level. All right, now note that when the price is when this bearish trend is occurring, okay, when we are having this bearish trend, we have a trend line following it. All right, you identify a trend line there. Are you guys following? So this is 15 minutes. All right, so this trend line is liquidity. Okay, price came all the way down to the equilibrium level, the 50% equilibrium level, to seek liquidity. All right, now if you observe, this is our 50% equilibrium. Okay, price came inside the 50% equilibrium, and what again, we will now start the bullish continuation. Are you guys following? We start the bullish continuation, so we start seeing bullish trend. Now where do we enter a trade? Once we have established this bullish continuation, once we establish this bullish continuation here, breaking the previous low and the previous lower high, all right, that signals a change of character. Are you guys following? Breaking the previous lower high, which signals a change of character. Now we will now enter at this particular level, at the demand of this new swing. All right, now enter at the demand of this new swing and buy off. Are you guys following? All right, so this is it. All right, now let's go back to our chart. So this Hilo USD is a live chart. Okay, now on our daily time frame, let me delete this. Okay, on our daily time frame, if you look clearly, you will see that our daily time frame external structure is from this swing point here to this swing point here. All right, so everything inside this structure, for the fact that price is still within this range, we are very much bullish. All right, now if you take your Fibonacci tool, mark from the swing low to the swing high to know where you are buying from, you will see that price already violates the 50% equilibrium after reacting at that level, coming down to a discount level. Okay, price come down to a discount level, and you remember when I was covering supply and demand, I said that the levels I am much interested in when it comes to supply and demand levels, the levels I'm much interested in are indecision candles. All right, so the indecision candle here, you can clearly spot this indecision candle at that is at 62 and 70% Fibonacci level. All right, you can clearly spot it. So this is our daily demand zone. Are you guys following? Now I will get rid of this Fibonacci. So this is our daily demand zone. All right, now price has already mitigated our daily demand zone and it's reacting from there. But do we just rush in and start trading because price has mitigated our daily demand zone? No. All right, we don't just rush in and execute our buy order. Okay, what we do is we wait for confirmation. We wait for a valid confirmation that tells us, okay, yes, price is ready to buy, that we should get in. Are you following? Now, firstly, we'll go down to 4 hours to know if 4 hours has already aligned with the daily time frame, because you can clearly see that the daily time frame is bullish, But let's see if 4-hour time frame aligns with the daily time frame. So let's go to 4 hours now. Now, on the 4-hour time frame, you can clearly see that the 4-hour time frame has not yet aligned with the daily time frame, for this is the swing point of 4-hour time frame. All right, this is a swing level of 4-hour time frame. So 4 hours is still clearly bearish. Are you guys following? This is a swing level of 4-hour time frame. So 4-hour time frame is still clearly bearish until this level is being broken. All right, until this level is being broken, now we will now say that okay, 4-hour time frame have aligned with our daily time frame. All right, we now say that 4-hour time frame has aligned with our daily time frame. Then we say that okay, price is officially bullish, but for now price is still bearish on the 4-hour time frame. Okay, now what do? We just start relaxing until whenever price switches bullish on the top 4-hour time frame? No, we don't do that. We trade with the current trend. All right, so we trade with the current trend. Now what is the current trend? The current trend is bearish. Okay, how I use this too. Okay, so since we have gotten the swing high and swing low, because this is where we have our last break of structure. Are you following? Now that I've marked 4-hour trend, what did I do? I will go down to a lower time frame to look, because I'm a day trader. I'm not a swing trader, but I will hold when the price aligns. All right. So now what will I do? I will go down to a lower time frame to look for a sell opportunity. Yes, daily is bullish, we know. Are you guys following? Daily is bullish and price has come into a daily demand. All right, but that doesn't mean that price must start buying immediately. Do you guys understand? So I will go down to a lower time frame to look for a sell opportunity. Now, what sell opportunity will I look for, or which lower time frame will I go to? Is either I go down to my 1-hour time frame, which is a lower time frame, or I go down to my 30 minutes time frame. So firstly, let me go down to my 1-hour time frame to see if I will see any potential zone to trade from. All right. So on the 1-hour chart, you can clearly see the 4 hours swing levels. All right, the 4-hour swing levels. So the 4-hour swing A and swing B is here. So this is 4-hour swing B here, and this is 4-hour swing A here. All right. So what we will be looking to execute a trade now that we have this zone. Okay. So our point of interest now will be, we'll use our Fibonacci tool, mark from the swing point A to our swing point B. All right. So our point of interest here will be this level. Okay, will be this level, because this is the level of this is a rejection level. Are you guys following? Now this is our point of interest. Note how our point of interest is above the 50% equilibrium level. All right, and again we have liquidity at the 50% equilibrium level. Are you guys following? We have liquidity at the 50% equilibrium level. So that will be our point of interest. Are you guys following? So that's where we'll be looking to sell from when price comes there. All right. So let's now get rid of this Fibonacci tool, since we have marked out our point of interest. Okay. So this is liquidity. This is our demand. All right. Our demand level. Oh, sorry, not demand, our supply level. Okay. So this is our supply. This is liquidity before our supply. So what are we anticipating, or what are we projecting? We are anticipating that price will come into this supply and then sell to our point B. Are you guys following? So as you can see, price is still making its way up to this supply here. Do you guys understand? Do you guys understand? So this supply here is actually a mitigation for a supply. Why did I say it's a mitigation for a supply? If you look at this zone here, you will see a double top, all right, a relatively equal high, then a run of liquidity here. we have covered liquidity, right? A run of liquidity at this point, okay, and then a drop. All right. Now price came back to mitigate this candle that ran out that liquidity, that grabbed that liquidity. Do you understand? So price came back to mitigate that candle that grabbed that liquidity before falling to break structure. Okay, so this is what we should be looking out for on Euro USD for now. All right. If this setup gets violated and price happens to break above this level here, that means 4 hours has aligned with our daily time frame. Are you guys following? So that means 4 hours are aligned with our daily time frame. We will now start looking for buy. All right, we will now switch trend because the trend has aligned. But now the current trend is bearish. And if the current trend is bearish, then we should be looking for sell until price tells us otherwise. Are you guys following? So what do I do? After making this analysis, I'll just set an alert here on Euro USD. I will set an alert and let it be. And I forget about it until whenever or any day I get this alert and I will start trading. Now, can I buy into this zone? Yes, I can buy into this zone. Where will I buy from? If I want to buy into this zone, into this supply level, all right, which is counter trending, okay, it's kind of counter trading. You are counter trading the trend, okay. So if I want to buy, it's a low probability trade, so I don't do it more often, all right. It's not a setup, it's a low probability trade, but most of the times it still plays out, okay. If I want to buy now, what I will do is I will go down to my 5 minutes time frame, all right, to check the or 15 minutes time frame to check the 15-minute structure or what the 15 minutes is doing. Okay, so coming down to my 15 minutes time frame, the structure is not clear. I will go down to my 5 minutes time frame. All right, the structure is kind of clear here, but I will still go down to my 3 minutes time frame. Okay, now on this time frame, what do I do? Because I know that this is a counter trend. You see here, this is my swing point A and my swing point B. So here I have a break of structure at this level. All right, I have a break of structure at this level, and have price come into this have price come down to a discount level for me to buy from? Let me check. No, price has not. So what do I do? Price stops at the 50% equilibrium. So where will I be looking to buy? I'll mark out this demand level here. All right, I'll mark out this demand here, this particular demand below. Take note, my demand for buys are always below the 50% equilibrium level. Okay, so I'll mark out this demand. After marking out this demand, I will draw this structure here that is on the 50% as my liquidity. Are you guys following? I'll draw it out as my liquidity. Now let me get rid of the Fibonacci tool. Now I have no business with this chart. What do I do again? What will I do now? I'll just set an alert here. All right, I'll set an alert here and wait for price to come into my demand level so that I can buy from. Have you guys seen how I marked out my supply and how I marked out my demand? You guys see how I marked out my supply and how I marked out my demand? So this is how I marked out my supply and how I marked out my demand. So this demand is a low probability trade, all right? It's a low probability trade actually, because price can decide to start selling from here, all right? But most of the time it plays out. So what am I anticipating now? I'm anticipating this, a buy to sell, all right? I'm anticipating price to come down here so that I can buy, and then I can buy into this level, I can buy into this supply and then sell back. Are you following? All right. This is my focus on the Euro USD trade. There's nothing here again to do rather than to wait. Okay. I'll be watching out this Euro USD trade. When we get the confirmation, I will drop the trade on our Telegram community. Okay. So if you want to trade with me, if you want to take the trade with me, you can join the community. If you are not in the community already, you join the community. Here is the community. All right. Join the community. It's Larry Forex Trades. Go to Telegram, search of Larry Forex Trade, and join the community. If you don't understand, if you are confused in any way, go to the community, click on comment on any post. All right. Click on comment on any post and ask your question. So it will bring you into this discussion room. Okay. It will bring you into this discussion room. Ask your questions and I will attend to them. All right. So thank you all. Let's call it a day, guys.